Ricardo Lara's reforms. Can they save California's property market from fire risks? In a bid to rescue California's beleaguered property market, Insurance Commissioner Ricardo Lara has announced a series of reforms aimed at addressing the growing crisis in the state's insurance sector. The situation has reached a critical point, with many insurers either pausing or severely limiting new policies, particularly in high-risk areas prone to wildfires. The current crisis is partly rooted in the 1988 voter-passed Proposition 103, which mandates that insurance companies obtain approval from the California Department of Insurance, CDI, before raising premiums. While this regulatory measure was initially designed to protect consumers from exorbitant rate hikes, it has inadvertently contributed to the growing crisis. Insurers have struggled to keep up with rising costs, exacerbated by an increase in natural disasters and the soaring prices of building materials, due to sluggish rate filing processes. Under Prop 103, rate filings are supposed to be reviewed within 60 days, with possible extensions extending the period to 180 days. However, in recent years, this process has often taken much longer, sometimes extending beyond a year. This delay has left insurers unable to adjust premiums in a timely manner, making it financially unviable for them to continue offering policies in high-risk areas. The current sluggish process doesn't allow insurance companies to raise premiums quickly enough to keep up with rising costs, said Michael Soller, CDI Deputy Insurance Commissioner for Communications. Rate approvals. Addressing these concerns, Commissioner Lara announced a return to the expedited rate approval process stipulated by Prop 103. This includes adhering strictly to the 60-day deadline with up to 2 30-day extensions. The plan also involves the development of a new data tool to ensure that rate filings are complete and accurate from the outset, reducing the back and forth between insurers and the CDI that has contributed to delays. One of the key parts of what Commissioner Lara announced today is we're going to be creating a new data tool, Soller explained. That's an important part of holding insurance companies accountable because no one should be playing games here with the data. The Sustainable Insurance Strategy. The reforms are part of a broader initiative called the Sustainable Insurance Strategy, which aims to entice insurers back into the market by creating a more efficient and transparent rate filing process. Lara's measures are also expected to increase the availability of insurance products in the state, particularly in areas where policy options have become scarce. My action gives the department new tools to hold insurance companies accountable for providing the complete information needed to make informed and timely decisions on these filings, thus reducing unnecessary delays, Lara stated. However, consumer advocacy groups like Consumer Watchdog are wary of the expedited process. Carmen Balber, the group's executive director, voiced concerns that faster rate approvals might lead to more frequent and higher premium increases, potentially bypassing thorough public participation. Lara promises that all reforms under the Sustainable Insurance Strategy will be implemented by the end of the year. This timeline aims to ensure that, starting January 1, 2024, insurance companies can resume writing policies more confidently across California, particularly in high-risk regions like Sacramento, El Dorado, and the Sierra. Will the time period alone satisfy insurers? While Commissioner Lara's efforts to expedite the rate approval process are a notable step towards stabilizing California's property insurance market, a critical question persists. Will the accelerated timelines alone be sufficient to satisfy insurers? Lara's solution to this dilemma is to make all parties, including the CDI, insurance companies, and consumer groups, accountable to adhere to the 60-day review process, with possible extensions. The question remains, will this expedited timeline be sufficient to meet the needs of the insurance companies? While Lara's reforms are steps in the right direction, balancing consumer protection with the financial viability of insurers is crucial. Ensuring that insurers can sustainably operate in a high-risk environment will be essential for the long-term stability of California's property insurance market. The effectiveness of this expedited timeline hinges on the successful implementation of a new data tool that Lara believes will be pivotal in addressing the market's issues. This tool is designed to ensure that rate filings are complete and accurate from the outset, minimizing the need for extensive back-and-forth communications that have historically caused delays. Balancing the need to protect consumers from exorbitant premiums while ensuring that insurers can operate sustainably in a high-risk environment will be critical for the long-term stability of California's property insurance market. Thank you for watching our latest insurance news segment. We appreciate your time and interest. We'd love to hear your thoughts on the California insurance crisis. Do you think this new tool will solve the issues and bring insurance companies back to the state, or do you feel it gives too much power to the insurance companies to increase rates? Share your opinions with us in the comments below. And don't forget to hit subscribe to stay updated with our latest news and insights.